Good afternoon, everybody. Welcome to our session today on the SWU Online Invest service. Really excited to talk about a new generation of investing for a new generation of investors for everybody this afternoon. Hope everyone's had a great week. Today's webinar will run about 30 minutes just to go through what's happening with our service offering and how you can potentially think about if this is appropriate for you. So kicking straight off, obviously everything that's talked about in today's presentation is general advice in nature. We haven't taken into account anyone's individual circumstances in order to prepare this information. So if you are seeking advice, please do see your financial advisor for tailored or personal advice. So just to give an overview today of who is the SWU group, obviously a lot of you have either been on the journey with us or have been our clients for a very long time. The SW group was established in 1986 by my father, Simon. And in the last 30 years, we have established ourselves as one of the preeminent multifamily offices in Australia. So we manage as a group just over $500 million Australian dollars. And the investment philosophy of our group is quite simple, but it's also hard to replicate. And we call that co-invest, co-strategy. So effectively what that means is that we never actually recommend or advise our clients to invest in anything or undertake a particular strategy unless our family has already done it and has proven that it works. Now, obviously, that doesn't guarantee that we're going to make money on every investment that we advise on, but by the power of differentiation, by the power of diversification and long-term investing, there is money to be made in all different parts of investment markets. We also differentiate ourselves from other multifamily offices is that middle-class families also, we've realized many years ago that actually do require the same services as the ultra-high net worth market. And so that's also one of the reasons why that has led us down the journey to create the SWU Online Invest service. So where does our credibility stand from? So obviously we have over a 30-year track record in managing money, and we manage over $500 million Australian dollars. Simon has the longest running finance weekly radio show in the Chinese community that started in 1993, and I've been co-hosting that with him since 2007. Furthermore, we started our own TV show that's produced in Cantonese, that's run on the world's largest distributor of Asian content, which is TVB Australia, talking about finance, tax strategies, superannuation, and ways to maximize your own finances. And that's been running since 2004. So that's the longest running locally produced Chinese TV show for 8 years now on the TVB platform. So jumping into, what is the problem with investing nowadays? I mean, I think, especially in the last 6 months, people really reflected. They've seen markets start to correct, and more so in the last month, markets have violently corrected. There's probably no other way of saying that. And the reality is that, market corrections and falling markets is really part and parcel of, the way to long-term invest and grow your wealth. That is the risk premium you pay for long-term performance. That's definitely not in any way telling investors to suck eggs, but the reality is that that is how you make and generate long-term wealth, is you require the need to take that risk on to achieve your financial target. Otherwise, you just put it in term deposits, which, as we know, for the better part of 10 years, has not yielded anything at all for investors. And it's only been in the last month or so where those term deposit rates have started to go up. But even so, inflation running at 6 to 7% is incredibly high. So those rates of return also commensurately don't seem particularly attractive. Not only are market conditions also very volatile, especially now, but there's also a lot of people spruiking get-rich-quick schemes, cryptocurrency, which I think everyone now who has been watching those cryptocurrencies have seen the markets absolutely fall through the floor, much, much more severe than even the share market. NFTs, and also Mayfair 101, which was a company in Australia that was the way I like to put it is that they created a product called Choose Your Own Adventure, where you basically choose the rate of return that you wanted, whether you wanted a 5, 6, 7, 8, 9, 10% return, which is the most bizarre thing to us. Yet they managed to raise from the high net wealth market over $100 million to invest in an island off the coast of Queensland as a mortgage fund, and now that's gone under, and all the principal is up in the air. No one knows if anything will actually be recoverable. So, it leads a lot of investors to think, who can you trust? As I said, this is the best example, of the Mayfair 101 group, where the founder, James Mawini, has actually been restrained from advertising and raising funds through financial products for 20 years. And so that's one of the largest, I guess, blow-ups that we've seen in modern history within Australia. There is, potentially, effectively, what he was found guilty of was effectively deliberately misleading investors into investing into something that they marketed as secure, but clearly was not secured. Then there's also been two other groups of people that we've seen in the market that have been promoting products. One that is called Spaceship Capital, so fantastic company that launched basically an online investment platform that's actually quite similar to what we've done with SWU Online Invest, but they are a passive investment company. They don't take any active investments, so you effectively invest in the share market or you invest in the bond market, but no one's picking stocks. And they found that one of the directors had failed to take necessary steps to actually even put investors in the right superannuation product that they had chosen in the first instance when they signed to Spaceship Capital. So again, that's one of the weaknesses of products that don't have a face. Then on the right-hand side, there's been the rise of what we call finfluencers. Finfluencers are people that are on YouTube, giving free advice, and ASIC has recently started attacking them. And the reality is that, I think everyone on the call today knows there's no such thing as a free lunch. So if there's no such thing as a free lunch, why are people putting up free videos about financial advice or the next best stock tips? This particular person was found, Gabrielle, was found guilty of 23 charges of manipulation of listed stocks on the ASX. So effectively what he was doing was he was buying a whole bunch of companies and then telling everyone else to buy it after he bought in. Incredibly dangerous, and obviously he's been caught. So what's that space? Online finfluencers are definitely not there doing any charity work for the market. Everyone needs to make money somehow, and that's the reality of investing. So in terms of, to give everyone the context of how this new service fits into everything else that we've built over the last 30 years, is that we have built now, this is sort of the final piece to our puzzle, if you could say, of offering our clients a full range of investment options, catering to effectively your investment size as well as your needs. So, starting from the bottom, we have SWU Online Invest, and I'm going to talk about that a bit later on. And then the minimum to get into that is $5,000. It is a online general advice platform, so it is not providing advice. There's no review service, and obviously because of that, it's incredibly low cost, but also very effective because you can start with $5,000. Then for clients that are under $500,000, about 4 years ago, we built a managed account called the SWU Dynamic Growth SMA. It sits on an investment wrap, and it's low cost as well, predominantly active. So we've blended an active and passive approach to try to keep costs down for clients. Because it's what we call, I guess you can call them a pre-mixed portfolio. One of the good advantages is that the portfolio does go through auto rebalancing as the investment committee sees fit as market conditions change. Now, that doesn't mean we're trading the portfolio. We have a long-term strategic asset allocation view on assets. So when markets sell off, like it recently has been, we've actually rebalanced the portfolio to take more defensive assets and put them into growth assets because we're getting in at a cheaper price. Through that system, there is a higher allocation to liquid assets, including shares and bonds. So obviously the portfolio benefits when the share market is going up faster compared to I guess the next two that I'll talk through. Then for clients that are sort of for 500,000 all the way up to about $1.2 million, we start to custom build portfolios for them, again, via an investment wrap structure. And so, this is a full active diversified portfolio that's custom built to the needs of the investor. And we talk a lot through about what their needs may be. The added benefit over and above what is offered in the SMA is that there is the ability to access a small range of illiquid assets to further diversify a portfolio and also reduce the volatility compared to markets. So to give you an idea, right, over the last sort of 6 months, and these are sort of round figures, the separately managed account has fallen about 10 or 11%. Our custom built portfolios, they have fallen for anywhere between about 4 and 10%, and that's depending on how aggressive the client was at the particular point in their portfolio. And then our SMSF clients have fallen between 1 and about 4% over this period. And so nothing is better or worse for a particular client. It really depends on your needs. And then finally, at sort of the top of the stack, you see self-managed super funds, which is for clients that are sort of over $1.2 million and above. And a lot of the costs related to managing an SMSF is fixed. So the larger the balance, the better it works. The smaller the balance, the least cost effective, and sometimes it's just too expensive compared to even putting it on an investment wrap, which there are obviously cost efficiencies for clients with investable funds between $500,000 to $1.2 million. Again, it is a fully active diversified portfolio custom built to the needs of the investor. But what it also adds is instead of a small range, there is a large range of liquid assets that the clients can access, including first mortgage syndicates, private equity, and other opportunities that even further reduce the reliance on investing in shares, as well as enhancing income. So, which is why over the last sort of 6 months, our clients in our SMSF structures have fallen somewhere between 1 and 4% compared to the Australian share market, which has fallen about 12, as well as the global share market, which has fallen about 25%, mainly driven by US equities. So if we then speak specifically about SWU Online Invest, it is a digital first dynamic investment platform that allows people to invest with smaller balances that simply need a little bit of investment guidance. They don't have necessarily very complex superannuation needs, or they aren't looking to save tax. A lot of younger people simply can't afford an advisor. Now, while the average cost of an advisor has now gone up, the average cost is at least $3,800. So advisors can't actually make a profit or make a margin for providing advice less than $3,800. Our minimum is about $5,500, and a lot of young people may not be willing to pay that amount, or they may not see the value, and all they need is some simple investment guidance. So what we build as part of this service is that there are 4 portfolios. We've got Balanced Beam, Income Booster, Growth Engines, as well as Asian All Stars. And what you see here on the screen is that that it is a minimum of $5,000 per portfolio. Now, there is a dedicated app as well. So whether or not you're on Android or on the Apple ecosystem, you can go to the respective app stores, so the Apple App Store or the Google Play Store, and you can see and find and download the SWU Online Invest app. Now, to be clear, this is an app that allows, think of it as a read-only app. It doesn't allow you to open accounts or switch model portfolios. That you have to do on a physical web browser. But there is absolutely no paperwork required for this platform, which is one of the benefits, and that's what what is driving this new generation of investment platform. So the SWU Online Investment Committee is run by the 3 of us. So obviously my father, Simon, who's got over 40 years of investment experience, myself, who I run as the lead portfolio manager, managing these portfolios, and I've got over 20 years of investment experience. And then we have Paul Harding-Davis, which has served on a number of our family companies as the CEO of our asset management company or another one of our family grouped companies. And he also has over 40 years of investment experience. So combine the 3 of us, we have over 100 years of investment experience looking at through many different cycles and trying to optimize client portfolios for long-term financial success. So these are the 4 investment options as you see. The 3 of the 4 being growth, balanced, and Asian all-stars, they are all being driven by an inflation plus target. So obviously, the higher the level of volatility that you're willing to withstand, obviously then, the target, excuse me, the target investment objective is obviously higher. Then we have the income booster portfolio, which I'm going to sort of showcase a bit more in a minute, because there's some unique opportunities there. And obviously the income booster portfolio is sort of looking at it from a different lens in terms of how to try to optimize and increase client portfolio levels. So as I said before, multiple ways of tracking your investment. Once you've opened the account, obviously, you can download the app, you can follow it online. And then what I'm going to do now is switch screens and show everybody the switch screens to this one to show everybody what the website looks like, and also how to sign up, so on and so forth. So everyone can see this on the screen here. And what you see here is that this is the SWU Online Invest website. So it's literally just swuonlineinvest.com.au. You can also, if you went to our own actual website, the SWU Group website, you'll also see a link here to SWU Online Invest. So simonwu.com.au, and you can take a direct link or directly go to us at swuonlineinvest.com.au. All the information is here, as well as links to go and download the app from the respective app stores. It talks through here all the 4 portfolios that's on offer, whether it's the income booster, balance beam, growth engines, and all stars, and what it's, how it's tactically allocated at the moment, and then how it works. So it literally is, if you're getting started and you're going onto this screen here, all you need to do is put in first name, last name, email, password, and then it will email you a login code to then progress your application, just to verify that your email address is real. After that, all you need is about 5 to 10 minutes. Bring along have your driver's license on hand, because all the identification verification is done at the back end, and within 10 minutes you'll have your account opened. You then nominate how much money you want to kick off with. Let's say it's $5,000, $10,000. The interesting thing is the average account actually is over $100,000 for all the investors that have been that the system has onboarded so far, which has been very interesting. And then from there, you can fund it via BPay. So there's no paperwork whatsoever. There's nothing to sign at all. Now, once you've set up the account, for example, just going back here, if you've opened the account already and you go to sign in and look at the portal, then you just sign in here, and then you jump straight in into the portal here. Very, very snazzy. It's a very, very slick portal here. You can see here that there's 2 portfolios that I have. I've got a balance beam portfolio, and I've got an Asian All Stars portfolio. And putting money where my mouth is, I put $5,000 in the balance beam, so obviously I've lost money for the time being. And then the Asian All Stars, I put $10,000 in again. That has fallen in value as well due to the recent volatility. You can see here since inception, 12 months, 1 month. You can sort of run reports to your heart's content. You can also see, just as the point of difference, this is your portfolio added up, what it's all about. You can go here and click breakdown, and you can see every single fund that you're invested in here. It's as I said, a very, very slick platform to look through your portfolio. You'll also see any portfolio updates. So, whenever we meet, which is generally, once a month. We have not met recently because of COVID, and some of us have been sick. But generally we're meeting about once a month to make any decisions on portfolios. And you can see here in the April, we described that nothing's been changed because there hasn't been anything for us to change. And we felt market conditions and the positioning of the portfolios are sort of in line with what we're trying to achieve. We also write articles about what's happening in markets at the moment, how markets have fared. So you can click on this and then read about, I wrote an article back in March about inflation, soon to write an article about market volatility. That's, like I said, part and parcel. Soon we'll also launch videos, market updates, things like that. So you can view all this content on the app or on the dashboard. Once we post something online, you'll get an email notification and click straight through and read out about it. Between here as well, you can see account maintenance. You can switch the model automatically here. So switch it from 100% balanced into growth or income booster or all stars. And this is where I want to talk about that sort of special feature we have in the income portfolio. So with the income portfolio, we have investors that are really investing, their $100,000 or so to try to derive a higher income stream for themselves. So what that model can do is at the end of every quarter, it actually quarantines all the cash payments from the underlying funds and shares. And then at the end of the month, it actually pushes it out to investors' cash accounts solely just to give them that income stream that they're looking for. So right now that portfolio is running at a cash yield of about 4.7%. On an annualized basis, which that is also actually slowly going to creep up as well because interest rates are going up. So that was paying 4.7% when the RBA cash rate was 0.1, and we're currently assessing what that running yield is going to look like going forward as we progress through the next couple of months. So that's the portal that I just want to show everybody. You can also run all the cash. You can run all your cash. You can run also contributions, updating contact details. You can also run reports that you can see here, and you can select, looking at the income, portfolio valuations, unrealized capital gains, so on and so forth. At the end of the year, you can also get your tax report. So everything is self-sufficient, self-service, but we also have help here. So you can leave a message if it's outside of business hours, but if it's within business hours, there is a live chat through our third-party provider on the platform. So that's the platform side of it and the portal. Now I'm just going to switch back to the original screen here. Now, what we've also done is we've gone and sort of looked at our own navel gazing process and try to work out over the last 20 years or so what our performance has been, because we've never benchmarked ourselves against the share market or anything like that, because we don't find it relevant, because whatever the share market does, our clients it's irrelevant to them. What is most relevant is whether or not their wealth is growing over time. So what we decided to look at is we found a client that has been consistently invested as a growth investor for 20 years. And so this client, it's a pension account, and so it's been a very consistent process for them to be invested as growth because they have younger children, and so they need that longer term performance. So they're willing to wear that shorter term volatility in order to generate that performance. So they started with us, and that's the blue line that you see there. That is net of the management fees of the underlying fund managers. And then the green line is the Australian share market, and the red line is the global share market. So you can see there we're quite happy with what we've been able to achieve for a client who's been invested in growth. To be honest, we didn't cherry pick this. We were just literally trying to find a client that has had a consistent risk profile throughout their entire journey with us, because clients do chop and change risk profiles over time, depending on what their own perception of risk is. That means that we can't, obviously pick an apples versus oranges comparison. We need to find something that's, genuine and honest, that's been consistent over time. If we then also run that against index investing, so a lot of times investors ask us, oh, why don't we just find the lowest cost? Because you can buy the index for almost zero cost. So if we run the Vanguard Growth Index, so Vanguard is the largest index fund provider in the world, this is their performance over that same time period for over 20 years. So you can see here that the reason why we believe in active, and we never ran this charts ever in history, is because you're paying a fund manager an active fee, or paying us as the online invest portfolio excuse me, online invest portfolio managers an active fee in order to generate an active over above the market performance over time, which is obviously something you can see that we've done. But just in the same light, as the market's corrected, our growth clients are also correcting as well. As a quick case study to finish things off, this is the income booster portfolio. So why I've showcased this one more so today, because the other ones are quite self-explanatory, but this one is, clients are currently looking at rising interest rates, falling dividends, term deposit rates are a bit higher this week. They're almost 3% or 3.2, but inflation is running quite high at over 5%, and the RBA is expecting or forecasting that inflation is going to run over to around 7% by the end of the year. So there's a lot of cost of living pressures, and investors are looking for more diversified ways of generating an income blended portfolio. But within our self-managed super fund capability, as we said, you really need to have that sort of $1.2 million to kickstart those portfolios to make it really worthwhile, and be also, what is most important is being cost efficient. So what you see here is that we found 6 different ways to basically slice and dice an income portfolio. And it's not just investing in term deposits. There are dividends from shares, right? We have listed credit funds, we have bonds, we have first mortgages, we have private debt and direct unlisted property, all blended together to generate right now, and this is 2 months ago, of about 4.7% in ongoing income. So this is the one where I said before that there is a special functionality on the platform that allows you to quarantine the income paid from each investment at the end of the quarter, and then it will be actually then spun out into your nominated cash bank account. So that's all I wanted to cover off today. As you can see here, for more information, please go on to swonlineinvest.com.au, which is the website I showed you before. And if you are seeking further advice, as I said, this is not an advisory product, but you may still need to seek the advice of your financial advisor or your accountant if you're looking more into this. But otherwise, I wish everyone a wonderful afternoon and also a great weekend.